Hey everyone, welcome to live Q&A on PPP loan forgiveness. We're back again. There was rioting in the streets when they found out we had gone to a pre-recorded message on Tuesday, so everybody has calmed down now that they know that the crazy train is back on the air, and we're happy to do that. So we've got Jack with Shumaker again, Jack Santaniello, as well as Adam Boatsman on here. And I just wanted to do a quick shout out to everybody out there that is adapting and overcoming. You guys are doing a great job out there. And I think the SBA loan forgiveness guidelines coming out this late shows that we're all having to do that again too, because it's challenging some things. But I want to do a shout out to the My Work Choice folks. We did a in-person strategic planning session yesterday together, their management team. They gave me this t-shirt, so I said thank you, I'll represent. And also to the P&TL guys, we did one on Tuesday, and both of those examples, they're just adapting and overcoming and doing a great job in the middle of all these challenges. So Adam, you want to take it and do a little bit of a preamble on some of the stuff, maybe some of the highlights that we did on that video that we released on Tuesday would be good.
Sure. So I think we officially shut down the office, I think, the Friday before the 17th. So we came in briefly on March 17th, and I was just reflecting on it's probably going to be 4 months before we officially open back up the office. So for the purpose of this discussion, I thought it appropriate to wear the Compass t-shirt as some form of navigation. I'd also like to point out that my house shoes and pajamas have not worn out. So anyway, we'll let you there. Wow. Yeah, so the couple things that changed on the forgiveness document relative to some of our initial guidance, but also provided some clarification on, when I say guidance, maybe the term speculation or educated guesses was the more appropriate term. But in terms of broad categories, first off, it was a fairly business-friendly interpretation, we think. And really the first big question that they resolved is this cash basis accounting or is this accrual basis accounting? And the answer is both, kind of. So what became pretty clear from the guidance is that it's cash basis, but you can't prepay, is I think the way that we would interpret it. So the whole paid and incurred language, or paid or incurred, really what it appears that they're getting at is that, stuff that happened prior to you taking the money, we get it that that's going to be in, and we don't want you to have to do anything administratively or logistically challenging if your clock expires, but you still have some bills to pay in the normal course. But what we don't want you doing is taking advantage of things and really prepaying a bunch of stuff. So, that I think was fairly favorable, and we'll get into more details, I'm sure, as we answer questions. The second thing that I think was a good clarification, I think all of us were speculating on, it's good. It technically is correct, but there's a possibility that it's not going to be allowed, is the concept of the owner raise during the period. So, what is pretty clear is that if you were already making $100,000 as an owner, and it doesn't matter if it was a partner, self-employed individual, or W-2 on an S corp, if you're making $100,000 in 2019, you're probably safe. Otherwise, during this period, it doesn't matter when you paid yourself, you're going to be capped to whatever you paid yourself in 2019. So owner wages is out in terms of giving yourself a big raise. In terms of bonuses and commissions, it's pretty silent on that. So how you pay people, it looks like, is how you pay people based on the paid and incurred language, or paid or incurred language. The FTE count, I think, got more liberal, in the sense that if you let people go for cause, obviously you got to document it, but if you let people go for cause, that is not a strike against you. You can count them still as if they were an employee. And also, if someone had their hours reduced voluntarily for whatever reason, that would really apply to somebody who, maybe was taking care of somebody or needed to take care of their kids. That is not a strike against you. So they really did a good job, making this a little bit easier to use than we initially anticipated. That said, obviously there's still some more guidance that needs to come out. So for example, an example of what it's silent on that, we would still ask her a question about is, if you, with the paid or incurred language, and it relates to 2020, if somebody was clocking to make more than $100,000, but it's because you paid them a big bonus January 1st, 2020, unclear whether or not you can factor out that bonus and just look at this period in isolation. So, our guidance would be try to get there without having to exclude that bonus, but there's a possibility that you could factor that out every calculation. Retirement payments, can you pay the full amount of the 29 incursion that you might have paid in September? Looks like you can based on this guidance. And it looks like you could also pay whatever's been accrued to date based on your 2020 plan. Again, it looks pretty business favorable, but again, we'll also expect, sorry about the dogs in the background. We'll also expect that at some point in the future, there might be some additional guidance. So, same thing applies, I think, that we've been saying before, which is, try to get there under the black and white scenario, but understand there's elements of gray that are still sitting out there if we need to use it. I think the other thing that was favorable too is that, if you needed to stretch the clock out for whatever reason, the alternative payroll period, I think this would apply more to people that were having to open up a little bit later. If you had the, if you wanted to choose a different pay period based on when your first full payroll cycle was going to happen, instead of taking the date that the funds occurred, you could take the date of your first payroll. So that was favorable in terms of stretching out the clock. All that said, the HEROES Act doesn't look like it's going to go anywhere, but there are provisions this was the legislation the House passed that had some fixes to the PPP in it. And sorry if you had some of this on your list, Jack, and I'm stealing on your thunder. The HEROES Act had some elements of PPP fixing in it that I think generally everybody agrees with. And part of that was stretching the clock out to 24 weeks or December 31st. Elimination of the 75-25 ratio in terms of forgiveness of costs. That was something that came from the automotive lobby. So, stay tuned. It appears there's bipartisan support for some form of a fix. And also what they talked about is redeploying any funds that were returned back to small businesses and having that go back in the pot of what could be loaned out. So, no fixes as of yet, but there appears to be bipartisan support for some type of fix, but at the same time, it's still gotta pass something.
Jack, you have any preamble you want to cover before we go into some of these questions?
Sure. On the first issue of what you were talking about last, Adam, on the legislation, it's an unfortunate but maybe expected that it didn't get through with the bipartisan support or lack thereof. But there's too much pressure for it not to happen, and there's too many still open holes and clarifications that are needed in the act itself. And yes, we received some guidance, mostly through the actual application form for forgiveness. And so I'm sure you guys covered this on Tuesday in your recorded comments, but for me, I look at the loan forgiveness application is the roadmap. And so in true governmental form fashion, I look at it as three components: the actual calculation form and the certification, the instructions for the calculation form, then you have a Schedule A worksheet, and then you have the instructions for the Schedule A worksheet. So you have to work through all those, and it builds upon itself. In these conversations, we've talked about documentation and how important that is. And it is actually set forth in the application as to what documentation is required. And it also says what you have to submit It also says what you have to maintain but not submit. And a couple of key components of that is that you have to hold on to those documents for 6 years from the date and the 6 years is calculated from the date the loan is forgiven or the is repaid in full. So if there is a component that is forgiven and a component that turns into that low interest, short-term loan, then the 6 years is calculated from that point. There is a demographic informational form that's optional, and they want you to provide voluntarily veteran status, gender, race, ethnicity. And so, and you talked about really kind of the components. I think one thing that maybe you didn't necessarily touch on was forgiveness application with respect to rent, that it applies to real or personal property. So you start talking about equipment and vehicles. Now it's been clarified, and we've been saying that, all of us collectively have been saying that that's probably likely the case, but it wasn't quite clear until a few days ago, essentially. So those are pretty much my kind of overall comments to supplement what you said.
Great. And we have had some people that have asked for copies of that PDF. And if you just Google the SBA PPP loan forgiveness application, you'll find it. It'll pop right up on your search bar. We've got a copy of it, but that's probably the fastest and easiest way for you to get it. If you guys are ready to rock and roll, I'm going to go ahead and start with questions that I've received already. The first one is from Alan. So Alan, thanks for this. It says that the SBA's website states forgiveness is based on the employer maintaining or quickly rehiring employees and maintaining salary levels. So this question is about maintaining salary levels and temporary pay cuts. So here's the example. If a company has an employee that a month ago made $150,000 annually and had his salary cut by 40%, do we reinstate the salary back to 150? Or since the pay is now below 100,000, do we need to bring the pay up to 100,000? We assumed that this would need to return to the associate's pay to 150,000 annualized, even though we're only able to claim 100,000 annualized at 1538 for 8 weeks for calculations regarding the PPP loan forgiveness application. We read the word maintain salary level to be directed at all associates of the firm. Can you help?
Yeah, so the salary calculation is on an individualized basis, and it comes off the top of your loan if you didn't restore it. But for this purpose, and I'll get the number wrong, but I'll be directionally correct. You got the number right in front of you, Jack. The most that you can pay anybody, period, is $15,432 or some number thereabouts that they specified. That is their version of $100,000 annually. So as long as you are at 75% of that for any individual employee that you had on a reduction, you're fine. So, you know, if you had somebody making, so for, in this example, 150 is irrelevant, only 100 was relevant. And the only thing that's relevant from that is that they're at 75% of 100. If, for example, they made 90, they would need to be at 75% of 90, 75% of 80, and so forth during this period to meet the test. And if you don't meet the test, then you would need to qualify under the safe harbor provision, which means that they're restored at some point during at the point that you reach the end of the period.
Okay, great. This is from Bob. We have a triple net lease on a building in Virginia, and our company there is billed and pays the property tax twice a year. One of those payments will be made in our 8-week window. Can we deduct that as part of our lease expense? And he's got a couple other questions here, but if you can address that one first.
I mean, you know, it's kind of a crappy area because if it was a gross lease, it'd be included, but in the way the language reads, you probably would not include the property tax bill, but I'd be curious to get your take on that, Jack.
Yeah, I don't know if we know the answer to that yet with respect to taxes. I think that the general concept is that it's to assist with payments to not the government necessarily, but to private individuals like landlords and others. And so, under that concept, I don't think it would be included. But to your point, Adam, that, okay, if it's included in the rental cost per month embedded in there because it's maybe part of CAM or some other component that is a lease cost, is it fair to allow that to be compensated versus a lease that has it specifically excluded as out of the rental cost and has it separated into its various components? So I would assume that will come in later guidance as to what the splitting of the hairs of the components within any type of expense. So for example, cell phone expense, those governmental fees that we pay. I don't think they'll get down into that minutia like that, but something on a larger scale like property taxes, that may be fair game for them to make that differentiation. But we don't know that yet.
Bob has a couple other questions here. So the next one is, we typically pay summer bonus to our employees. Can I pay this and up to the numbers to hit my payroll dollars of 75%?
Nothing that says that you can't, according to this guidance.
And the final question is, if I pay my payroll expense is 80% and the rent utilities is 21%, are we still 100% covered, or does the rent utilities still need to hit 25%?
I'll answer the second question, then I think, Jack, you wanted to go back to the first question. The factor that determines your forgiveness amount is you have to hit at least 75% on payroll costs, because the amount of forgiveness, which is at the bottom of the forgiveness application, is the lesser of some calculations. But one of the calculations is take your payroll costs, which is line 1 of the application form, divide that 0.75. So if you spent less on payroll but still spent the total amount, then you're going to be limited in the forgiveness amount. If you went over it, that doesn't matter. It's just the max in that case would just be the amount of the loan.
Yeah, and I would agree. Said a little bit differently, if you spend 100% of the loan on payroll, then you're fine.
Yeah.
Back to the first question, I just want to make sure that it's clear that in the question, it was assumed that this was a normal bonus paid during the period of time. And so if it is just dollars that, and we keep, I once again get to talk about the movie Christmas Vacation. If you're Clark and are getting that bonus, and that's an expectation of your compensation, and so really it's core compensation. It's not a bonus. It's maybe it's performance bonus, but it's an expectation, and it was normally paid within that period of time that you're not accelerating that, then it's likely okay. So there was a lot of assumptions made in that question as far as, is it allowable? So there needs to be an analysis as to what were you doing in the past at this time, and then also at this time, is it performance based? And if someone's not performing, is it a proper bonus as well?
Awesome. Next questions, actually 3 of them from Tom. And the first question is, I have several online applications that I run that are critical to my business: QuickBooks, Lucidchart, ANAX, Microsoft 365, Dropbox, and Zoom. Under PPP, would any of those be considered utilities?
Not in this application form. So I think that would be in our middle bucket, which is possibly, but don't count on it now. Try to fill the first bucket, which is hey, it's pretty cut and dry.
Yeah, and I'm hopeful that at some point they'll take some of the looser EIDL parameters of what is permitted expenses in that arena, and maybe either include them expressly or explicitly into the PPP program with respect to the definition of utilities, or specifically exclude them. I mean, it's kind of, we're in limbo land as to what you take all those categories of things like rent, utilities, and then you kind of have a subset of what might be included in those things. So, you know, I would, as you're going through your suggestion, as you're going through your analysis, maybe creating those buckets, and maybe your bucket, you actually have 3 buckets under utilities as to what is definitely not, and what is in the maybe bucket, as Adam has explained in the past.
All right. The next question is, it dovetails into this. I pay my employees a cell phone allowance. Would that be counted towards utilities?
I wouldn't, possibly I'd put that in the middle bucket.
And the last question is, I'm not going to even read it. He's messing with us. So, this is from Joe. If you use alternative payroll period method, where you start with the next payroll period after receiving the funding, can the 4th pay date fall beyond the 56th day? For example, funded on May 7, next payroll start is May 16, 4th payday would be July 22nd, covering July 1 through 15, the 4th payroll in the mix.
Yeah, so that's where, you know, it's a combination of cash versus cash and accrual. That if you elect the alternative, actually it doesn't really matter whether you elect the alternative covered period or the original period. If something falls after your cutoff date, that it include expenses associated with your period, as long as it's paid in the next cycle, which in this case would be payroll. If it was rent or something like that, it'd be the next time you would normally pay that stuff. You can go ahead and include it. You know, I think our assumption would be that you would just delay your forgiveness application until you could prove that you actually did pay it. But you can include it in the application process. So really all the cover period, the alternative cover period, buys you, you know, we think it was thrown in there to just make it administratively easy to go ahead and report payroll, so that whatever you're reporting aligns up perfectly with your payroll reports that you're going to produce. You know, what it also does is it allows you to stretch the clock out for the purposes of payroll if you're one of those companies that had a delayed start for whatever reason. But in theory, both should arrive at the same answer, whether you pick the alternative or the regular cover period.
Hey, Gary, before you go on, can we rewind the tape for a moment with a little asterisk? So in looking at the loan forgiveness application, the instructions where it talks about eligible non-payroll costs, and it talks about covered utility payments, it says business payments for a service for the distribution of electricity, gas, water, transportation, telephone, or internet access for which service began before February 15th. So it looks like telephone and internet access is included. It doesn't say landline or cellular. But then when you start getting into things like other services that are electronically based, software based, it is not clear necessarily what's in there. But you know, as far as telephone goes, cellular phone, and it doesn't say the actual service cost of it. So does that include, you know, the utility, the taxes and other governmental fees that we pay, all of us pay on our cell phone bills?
The next question is, and it's a scenario from Michelle, saying, we still have clients that are completely oblivious to this process. They think that because they received a PPP loan, they can simply spend the cash without justifying their business has been affected by COVID-19. Can you please shed some light? Jack, you want to handle that one?
Sure. So two different things. First of all, you know, there is were you eligible and should you have gotten the loan to begin with? So that goes into the presumption of being under $2 million of loan proceeds received. Do you have, and have you demonstrated the necessity? So that's one issue. But focusing on, hey, I got some money, I can spend it however I want to, that is not the case. And, you know, we've said from the very beginning, and the constant from the very beginning of this process, of the loan process, is that acquired properly, used properly within the proper time frame and for proper purposes. So you have all those components. Now, what those have been defined as moves a little bit. For example, the alternative period that now is for payroll payments that are made outside of that the initial period that we thought was a strict period. And so yeah, I would, if this person is so inclined to tell those people that they're wrong, that would be the correct answer.
Thank you. Next question is from D. If employees are paid through a temp service, can we include those employees and wages as part of our FTE and payroll? And finally, can PPP funds be used for bonuses?
You know, the temp service, I don't know the answer to that, because I'm looking at it from the point of view of the staffing companies that we have that are clients, and they got funding based on that person being their employee, not mine. So my gut reaction would be that that's just another vendor to you. So probably not, because it's not going to appear on a payroll record anywhere. And I don't know if you had an opinion on that one either, Jack.
Sure. I think there's a distinction between using a temp service versus a placement service versus maybe a leased employee, where the potential obligation for benefits is somewhat a hybrid of what the company provides versus what the temp service provides. So I think we can't really answer that universally, but I agree with Adam that generally speaking, those are likely employees of the temp service that are being leased to you through a written agreement. And so you're likely paying the temp service a fee for doing that, and then they pay those employees that are working for you. So it really depends on the legal contractual nature of those people to you based on the contract. But I generally speaking, likely that they are not your employees. So it would be double dipping if you were to, first of all, seek loan proceeds, seek a loan for those people that are not your employees, but then also use that money for them.
So
What was the second part of the question?
hold on here. I've got to go back to it. Can PPP funds be used for bonuses?
Yeah, Jack covered that quite eloquently earlier.
Yeah. So this, Tom just hit us up on the chat, and he basically said, on temp service question, you can use the FTEs, but not the dollars, not least, that's covered under the PEO.
I don't know whether or not you could use it for the FTE calculation or not. There's not any authoritative source that said that you could, but there's not any authoritative source that says that you can't either. So that would be the equivalent of saying, hey, I'm going to use independent contractors to get to my FTE count, but I'm not going to use their labor dollars. So I don't know until we hear something about that, whether or not I would take that to the bank. That said, you know, if you're using a PEO, you know, which professional employers organization, where you basically have outsourced all of your labor to like ADP, Paychex, Insperity, whatever, those costs are included because those costs were eligible for the application process.
Yeah. And Tom has a recruiting and staffing firm, so it's interesting. It's clear there's some ambiguity there, but and then this also came in from Robert. If the temp service gets PPP and the employer is employing them and paying the temp service, doesn't the temp service get paid twice?
Well, I mean, that would apply regardless. and yes, the temp service would get paid twice. They would get paid by you for the labor, and then they'd also get that amount forgiven through the Paycheck Protection Program. So the staffing companies that we had, or that we have as clients, we're generally using the money to keep paying people that they really thought were valuable and wanted to help out, even though they weren't necessarily getting reimbursed by the customer for that. So, because the customers might have been shut down or had a partial slowdown, so they were just, augmenting some hours that they otherwise wouldn't get. So yeah, it is double paying, but that's not quite how our staffing company clients were using the money.
Yeah, I would say that there's a practical aspect of that too, which is the company paying the staffing company pursuant to that services contract if they're not getting any work done on their behalf, because those employees have been, that the company that was provided the temp staff has said, we don't have any work, so we don't expect them to show up, or we're not going to pay them. So I think there's, and practically speaking, it probably is good to have some sort of communication or discussion between the temp agency owner and the business owner to find out who's doing what, who's applying for what.
Yeah, that makes sense. Next question is from Brian. This is interesting. So for individuals making over 100,000, the calculation of wages is 100,000 divided by 52 weeks multiplied by 8 weeks, which is 15,385. Our loan amount was based on 100,000 divided by 12 multiplied by 2, 1666.67 for those individuals. Will the SBA allow for the larger amount to be forgiven, or is this lower amount set in stone?
Lower amount looks like it's set in stone based on the application for forgiveness, because they were pretty clear that the amount is 15,000, whatever it was.
Yeah, there has to be consistencies for the board with calculations. So there's gonna be, it's weeks, not months, I think.
All right, next question is from Brett on payroll protection program. Clarify if I can spend all the funding on payroll and have it be forgiven.
Yeah, assuming that you meet the other qualification criteria in terms of the FTE count and the salary piece.
Next question from Anonymous. What happens if we laid off employees for cause prior to receiving the loan? Are we excluded from the FTE reduction for the loan forgiveness?
Well, I think the problem there is the term layoff. If fired for cause, you get accounting. If laid off, you're supposed to make a good faith effort to bring them back. So I think the key there is the term use of the term layoff versus versus actually just let go for cause. What do you think, Jack?
Yeah, I think that's right. It is what was the separation of employment, what was the nature of that, and that, we're kind of talking about two different things. So on the back end, if you offer them employment and bring them and they say no, then the employer is not penalized, but they've made clear that that may have consequences to that employee's continued unemployment benefit if they are under unemployment.
All right, next question is there a reason to process the last payroll before the 8 weeks ends?
I don't think so anymore. I mean, they pretty well made clear that if you've got expenses that occurred outside of the 56-day period, but that you paid after the 56-day period, but they were incurred during it, you can count them. So I think this whole, a lot of the earlier guidance that we had, that be prepared to do an additional payroll run, but don't do anything yet. I think that's all out the window, that you don't need to worry about that anymore as of this guidance. Could always change, but as of this guidance.
Yeah, and I think that the key of what you said, Adam, is the word processed. Is as long as it's for a period of time, worked for a period of time, but it's just a matter of a delay of payment that is made afterwards. But you still can't accelerate amounts that are due outside of that pay period and throw them in.
Yeah, that's right. Like you can't pay in advance a couple paychecks or whatever. You're not supposed to do that. But I guess related to that, if in your, again, it looks like you can do this from the guidance unless they change it. But I think the one thing that people do want to think about as part of this process is that, the key is it has to be paid by the next normal payroll. So using the Jelly of the Month Club bonus from Christmas vacation, if someone has been earning a bonus, but you normally paid that at the end of the year, you would want to go ahead and get that accrued and then paid in the next payroll instead of just accruing it and not paying it, if you want it to count, at least the pro rata equivalent of it.
All right, next question is from Richard. My company has multiple pay periods. Some employees are paid monthly and others are paid biweekly. Those who are paid biweekly are broken into two groups. Each one has a different pay cycle. For purposes of forgiveness, will we be able to treat each payroll group separately?
That's kind of a shit sandwich.
How do you really feel, Adam?
Yeah. Well, you gotta complicate stuff. So first suggestion is simplify your lives. It's way too complicated. Yeah, in that scenario, this is just off the top of my head, I probably would pick just the cover, assuming that you were able to stay open and been paying people. In this case, I probably would pick one period across all of them. And knowing that you're going to have some accruals and some others, it's going to be clean. So for example, if it's easiest just to say, look, for administrative purposes, it's easy just to say, the hourly people that are paid, once a week, we got the money on the 20th, we're going to pick the 26th, but then apply that across the board. If that works for you, go that way. If instead it's easiest just to say, hey, we got the money on the 20th, it's going to be the 20th, regardless of all these different payroll cycles, go that way. But I don't think at this point you can say, let me have 5 alternative covered periods. I guess you probably could try that, but that just, you're going to have to explain this to somebody, and that just seems very complicated to try to explain.
It seems like you have two choices. It's you do the covered period is what it is, or essentially the last payment is extended beyond the covered period in order to accommodate those payors, those employers that are on a delayed basis, which is typical. You pay in the following week. You don't pay on the last day of the work period necessarily in most cases. So sometimes it's delayed, a week, 2 weeks, in this example, a monthly basis. So I think you need to just continue with your process, but it's a matter of calculations. And really, you start from the period of when the period shifts very in short increments, but you can't have multiple shifting, if that makes sense. I don't know if that helped or made it more muddy.
Okay, we've got about another almost 20 questions coming, so I'm going to try to go rapid fire, and I'm going to condense 2 of them here from Anonymous. The first question is, are dental costs included in healthcare expenses? And the second one is, we receive PPP under $2 million. Do we still need to submit a forgiveness application?
First question, it's eligible health costs. So as it stands right now, you didn't use those in the application process, but in theory, they could be eligible on the backside, but I wouldn't count on it. Everybody has to submit a forgiveness application, period. It doesn't matter how much you applied for.
Clarification from Tom, who does have a staffing company here, says, according to American Staffing Association, their general counsel confirmed that companies utilizing staffing firms can use temporary headcount in overall headcount, but they cannot use the wages or use the services invoice in their total wages for calculating the PPP loan. This was as of April 22nd. Not sure if this has changed, just as an FYI. Thank you.
Yeah, I hear you. So a couple key points there. First off, it's April 22nd and today is May 21st. And this changes on a daily basis. Secondly, there's been no authoritative source, and the only authoritative source is the law. The second most authoritative source is the Treasury. Third most authoritative source is the IRS, and none of those have talked about that specific topic. So I just, I'm not trying to be an ass. I'm just saying I wouldn't count on it as of today, regardless of what that says.
All right, great. Next question is from Brian. Do the rules governing owner compensation mean I can't hire my wife anymore?
In theory, if they still have a job to perform, you could. It was silent on control groups or related parties.
All right, next one's from Robert. If the owner had been taking distributions in 2019, but now wishes to max out the W-2 payroll to 100,000 annual rate and reduces the distributions, is that permitted to be included in the PPP payroll calculation for forgiveness?
You live by what you did in 2019. So if you maxed out distributions, but you still took some W-2, which you should have as an S corporation, you're limited to whatever that 2019 W-2 was. So if it was 15,000, if it was 50 grand, it's 8 weeks of 50 grand. If it was 100 grand, it's 8 weeks of 100 grand. If it was 200 grand, it's still 8 weeks of 100 grand. So you're limited to 2019, whatever that was.
All right, next question is, if we use 90% of our PPP on payroll and the other 10 on qualified expenses, is that okay? And I think we've already addressed that, so yes, it is. The minimum is just, you've got to have 75% towards payroll, correct?
Correct.
Next question. I think I'm making the FTEs harder than necessary, but we started. We started with 40 and ended with 40, but we had 2 employees that requested a reduction of hours. I understand that the FTE is fine, but what about the salary reduction portion? Obviously, their salary is down compared to the various comparison periods.
Jack, if you could, I may mess this up, but I know it qualified, that scenario qualifies for the exception on the FTE count. And there's some language around if you reduce hours, but that seems to be more directed at your discretion rather than the employee's direction. So I think it's really silent on voluntary reduction in hours from the employee's choice. So that would, to me, imply that, hey, that's probably going to be okay, even if it's silent at this point.
Yeah, I would say probably okay, but we're not sure yet as to what that necessarily means, because I don't know if there's been that splitting of the hairs as to whether or not you decide, hey, I'm not coming back because, or not coming back full time. It's kind of like, partial unemployment and partially working. So I think we will know more later on down the road as to what that means as we go through, because that really is a forgiveness issue. It goes to is there a penalty for reducing someone's salary by more than 25%? And so and then the splitting of voluntary versus involuntary reduction, I think is a point well taken that I have not seen language that addresses that, but I think the spirit of it is that to penalize the employer who does not truly bring that FTE count up past the 75% mark of amount of wages that was being earned by that particular FTE. But that's speculation at this point.
All right, this is from someone who got their PPP application in early. They received their funds on 4/9. Payroll paid on 4/10. 56 days ends on 6/3, and we have a scheduled payroll on 6/5. Can we include both of these payrolls or just one or the other?
You could include both to the extent that the last one has time that is associated or earnings associated with the cover period, the way that it reads now.
Yeah, and I would say on the front end of that, I think you said received on day one, funds received on day one, payroll paid on day two. So that payroll paid on day two probably isn't for wages that were incurred during the covered period. It's probably from the week prior or from the period prior. So you need to be careful on the front end of that too.
Yeah, that's where it gets a little bit confusing in the language where it says paid and incurred. That instead of paid, because it says paid and incurred under payroll, paid or incurred everywhere else. But yet the examples they keep on showing in the guidance says, hey, it looks like even if it happened before, as long as it was paid within, there's, it looks like it could be, but, you just need to be forewarned that there could be some clarity that comes out later that says it won't be.
Yeah, and
All right,
if
next
you want,
I
I have in front of me the language for further discussion, because I don't think it's necessarily clear. I think, again, we've been given some writings and there's going to be interpretation of it. So for eligible payroll costs, the covered period or the alternative payroll covered period, which are defined as payroll costs, are considered paid on the day that the paychecks are distributed or the borrower originates the ACH credit transaction. So that's when they're considered paid. To be considered incurred, it's costs that are incurred on the day that the employee pay is earned. So, again, it's questionable as to, because of the use of the word and or in various places, and in various places that are inconsistent with each other as to what that really means. So, just be mindful of those payments that are made on the margins. And let's see, as we go through this forgiveness application process, if there's further interpretation as to what that means on the front end and the back end.
Yeah, and I think in this specific example, it's probably pretty clear that the last one's going to have some stuff in it. The question's really going to come down to the first one.
Here's the next scenario. We pay bi-weekly if we received our loan on Tuesday, 5/5, and the pay period started on 5/4. Can we still claim the 2-week period minus 1 day of our first paycheck using loan funds? Otherwise, the alternative method, the adjusted final paycheck, will not be until July 17, but the 8-week loan period actually ended on June 30th.
To me, that falls very similar to the previous example, that, if you had some stuff that was relevant for the period in your cover period, that counts. Otherwise, you pick the alternative cover period, and even though it expires 6/30, you can still pull that. You can still elect to go past that cover period on the back end.
This is from Paul, and I think we covered this earlier, but would the critical applications like QuickBooks, et cetera, qualify under rents, leases bucket?
Not as it reads right now, but could be coming up.
From Cindy, I'm a little confused about the per employee 75%. If we bring back an employee at 100%, but only for the last 2 weeks and beyond of the 8-week period, is that still okay, or is it considered only 25%, 2/8?
I think that would fall under the safe harbor criteria in that case. You'd fail the average test, but you'd pass on the safe harbor test. You got any thoughts on that one, Jack?
I think yes, meaning the safe harbor of the June 30th, bring everybody up to where they need to be.
Yeah.
This is from Toinette. Is malpractice insurance covered for essential workers if they work in healthcare?
I wouldn't, that's that middle category to third category, which is could be, but I would not count on it. I'd try to get there without it. Because again, it wasn't part of the application process. So likely not going to be part of the forgiveness process.
And under the theory that what they're trying to do is subsidize certain costs, so that way you can use your cash to pay for other things. So they're not trying to subsidize your entire business. So there's an expectation that you will use your cash for those other costs because you don't have to pay for rent and other things.
Right.
Next question is, if trash is embedded in the water bill for business, do we need to adjust the amount paid towards the water bill, or can we pay the full bill using the loan funds?
I think our feeling right now is, the whole bill is going to count because it'd be so hard to bifurcate that stuff. But then you get back into, is someone getting more benefit than somebody else, which kind of gets back to the triple net versus gross lease question. So for example, for us, janitorial is included in our gross lease, but for other people, it maybe not. So in this case with the water bill, I'm guessing the whole water bill is going to pass and you're not going to have to pull out the janitorial piece or the trash piece, but stay tuned.
Follow-up question to one of those earlier ones. What's the difference between layoff and fired for cause?
Well, exactly that. You want to give a opine on that further, Jack?
Sure. So, a layoff is, it's kind of splitting the difference between these two terms. So definitely, obviously, termination for cause is something that either the person has done or not done that is not in compliance with that person's duties and obligations. It could be pursuant to a written employment agreement. So it's definitely that you can say they didn't do what they were supposed to do. Better if you have a written employment agreement that has at least what the duties are, and obviously things like fraud and embezzlement, those kind of things are obviously terminations for cause. On the layoff, and these terms are used interchangeably. So layoff, furlough, those kind of things. It really depends on what you end up doing. Is it an involuntary termination? And it's not for bad things. It's just that you can't use that worker anymore, et cetera. So, it is a furlough or a layoff. And then how does that impact their ability to seek unemployment? So if it is basically you're terminating them without cause, then they are likely can go get their unemployment benefit. And that's maybe deemed a layoff. So it's really what the reality is versus the nomenclature on what you call
it. Yeah, this is from Robert. This layoff term for cause question is an HR question. Sounds like they need employers association. So thank you, Robert. Anonymous, I heard rumors that the forgiveness period may be extended from 8 weeks to 12 weeks. Any truth to this?
That was part of the HEROES Act that we covered off on the front part of the call, that there's bipartisan support for making some modifications like that, but nothing's passed yet. It was in the House bill that passed, but that's not going anywhere in the Senate.
Next question is from David. Based on the date we received PPP, the 8-week term ends on 6/16/2020. Would payroll dated 6/19 count for payroll for forgiveness?
Yeah. Depending on, you might have to shave 3 days off of it depending on what you picked as your recover period. But yeah, it would.
Next question, for commission-based employees that receive a draw against future commissions, these are trued up quarterly. Should we count the cash compensation of the draw amount for purposes of forgiveness, or should we calculate the actual commissions earned, understanding they won't be paid until the next payroll period after the covered period? They'd be paid in July.
It really, it depends. And Jack, I would ask you to weigh in on this one too, that, assuming that whatever true up mechanism happens in the next pay cycle after the your covered period ends, then I would go with whatever's going to get the best result, which probably would be the commissions earned number. But the key there is it actually has to be paid. So if you were on more of a quarterly basis type payment and you were paying a quarter in arrears, so for example, anything that I earned in the second quarter ending June 30th, I got paid in the third quarter, and I didn't get paid that until September, whatever, that's not going to count unless you get it paid in that first pay cycle after your cover period.
Yeah, what he said.
Okay.
Yeah. Thanks, Jack. I paid him to say that.
All right, this is from Lucia. Does supplemental insurance payments count toward overhead portion like Aflac, vision, dental, cancer, other insurance?
Probably not. When I say probably, meaning likely not, that would be the middle of the third bucket.
Next one is, I have an employee that resigned during the 6th week of the 8-week period. Will that affect my PPP?
You get a pass on resignations.
This is from Joe. I acquired my business in late 2018 and didn't pay myself anything in 2019, but rather invested in the growth of the business. Why am I unable to pay myself anything and have it forgiven during this 56-day period? Any leeway here? The rule seems a bit harsh.
I didn't write the rules. They're just trying to make sure that people didn't give themselves raises that they shouldn't, raises to take advantage of the government. So maybe there's going to be something that comes out to correct that. But they're just trying to make sure that you didn't give yourself a raise. But, don't know your personal situation, but maybe that's a scenario where you could pay a spouse conceivably.
Yeah,
Assuming
that kind of is similar to what we discussed in the past, where you have a very conservative owner that takes money that is their money, post-tax money, possibly, and reinvest it in the business and maybe raises their capital count, whatever it may be. So versus the similar situated employer owner that went out and went on a bammed out ski trip somewhere in January using that money. So it's yes, somewhat unfair and somewhat a penalty to that business owner that was more conservative with their cash. So again, to be seen what if there's adjustments for things like that.
All right, quick time check. We're at 11:58 and we've got another 7 questions that'll probably mushroom again. So we're going to go ahead and continue on. And then if they really go long, we'll cut it at some point so it's not an all-day affair, but I don't think that'll be the case today. And we will plan on being back next week, just given the amount of need that's still out there. So, and if somebody has to bow out, we still have 110 out of the 120 people that have been on here. If you need to go to this BGW CPA YouTube channel, we'll post it back up there later on this afternoon. Again, BGW CPA YouTube channel. Next question is from James. Our 8 weeks ends on June 24th. We have a pay period that covers 6/15 to 6/30 that won't be paid until 7/15. Can we ask for forgiveness for the full 6/15 to 6/30 period or just the 6/15 to 6/24?
That one's going to depend on whether you elect the cover period or the alternative cover period. Presumably if you elected the cover period, it would be a pro rata calculation. Otherwise, if you elected the alternative cover period, so you delayed the start, then you'd get the full amount.
This is from Eric. We pay weekly payroll. We got funded on Friday, April 17th. Our covered period ends on Friday, June 12th. So we'll have actually 9 pay cycles. can we claim all 9 cycles, or is the first one excluded since it was earned the previous period prior to getting funded?
That's one of those not quite defined, and it depends on what the definition of is. That was funny for all the people that were alive in the 90s. It really comes down, Jack talked about this earlier, it really comes down to, you know, the conflicting use of and or language throughout the course of the document with respect to the paid and incurred language associated with the payroll portion, and then paid or incurred associated with the other expenses, and then even conflicting language within the payroll piece. So, you know, right now there's, you know, equal people that say it's in as there are equal people that say that it's out. So, you know, right now I would, you know, try to get there knowing some of it could be factored out, but it could also be in. I'm sorry that I didn't really answer the question, but, you know, I think the answer is it depends upon further guidance, and it's not clear yet whether it is in or it is out. So I'd be looking at it both ways. I mean, aggressive Adam says it's in. There's not really a conservative Adam, I don't think. There's just a totally against the law Adam. So I still would want to know, to hedge my bet, that there's a possibility it really could be a pure accrual.
And fellas, this may be helpful. And, you know, I don't like reading stuff in conversations, but I think this is important because and it's the definition of alternative payroll covered period in the loan forgiveness application. And so if you'll indulge me for a moment, let me just read this. For administrative convenience, borrowers with a biweekly or more frequent payroll schedule may elect to calculate eligible payroll costs using the 8-week, 56-day period that begins on the first day of their first pay period following the PPP loan disbursement date, which is defined as the alternative payroll covered period. So for example, if the borrower received its PPP loan proceeds on Monday, April 20th, and the first day of its pay period following the loan disbursement is Sunday, the 26th, the first day of the alternative period is April 26th, and the last day of the alternative payroll period is Saturday, June 20th. Borrowers who elect to use this alternative period must apply the alternative payroll covered period wherever there is a reference in this application to the covered period or the alternative covered payroll period. However, if there is a reference that says only the covered period, then they mean only the covered period. So confusing, yes. So again, back to the ands and the ors, but helpful in the sense that it shows by way of example what the shift is and how the shift is intended to work between the originally defined covered period and the shifting alternative covered period as far as the movement.
Yeah, and then again, to echo what Jack said, to get it confusing, depending on how you had things set up, even if you use that 26th example, there could have been expenses that were, or pay that had been earned from prior to you receiving funding included in that, but it's silent on it. So that's where it's just, you know, you could equally assume that it's either okay or not okay. So I would assume that it's probably going to be okay, but at the same time, you know, be prepared that there's a chance that it's not. Because the whole point was administrative convenience on that one, implying that you're not going to have to do a, well, how many days was here and how many days was here? It's just, hey, count the whole payroll, bam.
Okay, this is some clarification that's needed. Can you use processing fees for payroll to be included in the 75% of payroll spend?
I wouldn't think so. And dang, if you're having to use those fees, then you probably got other issues. I didn't mean that as an offense. It's just that it's a generally de minimis cost associated with total payroll, but you go back to it, that was not part of the application process. So it's unlikely that that's part of the forgiveness process.
And Adam, this one probably goes to you. Do these webinars qualify for CPEs for CPAs? They should.
Remember, it's self-reported, but if you want it to be CPE eligible, then we're going to have a sign-in sheet. Y'all are going to have to start answering quizzes. And then rate Jack and I, which I probably don't want to know.
All right. This is from Marguerite. We have many customers who've suspended our service, yet are continuing to pay for the service. Can we gift this money to employees who are now in unemployment, including independent contractor who is on PUA unemployment? Will they have to count that money in their weekly certification? Also, can our company simply gift them money until we can rehire?
That one is, it depends on what you're going to do on your end. You know, if your end, the intent was to try to still deduct it, keeping in mind this whole thing about taxation and all that still stands out there. If your intent was to deduct it, you're pretty limited. You're going to have to figure out how to get it through payroll. If your true intent was, I don't care, I wasn't going to, you know, I don't mind picking it up as income. I don't mind it being taxable to me. You know, I always forget the indexed gift exemptions, but as long as it's less than the annual gift exemption, which I'm guessing is probably about $17,000 a year per person right now, Jack. Nothing doesn't say that you couldn't just, you know, write on a sheet of paper, hey, I gift Jack, you know, 17 grand as part of my annual gift exemption, but it means I can't take a deduction for it. I would have paid taxes on it. And that scenario shouldn't impact their eligibility for unemployment because you're just simply gifting them money.
Okay, this is from David. So Jack just referenced June 30.
To clarify, that having it be below the gift exemption level means that it's not a taxable gift to the recipient. So that's the only thing you got to be careful of.
All right, thanks. All right, this is from David. Jack just referenced June 30th as the safe harbor end date, but prior, Adam had said the last day of the 56-day coverage period was the key date to get FTE count back to a higher number under safe harbor. Which one is it?
Well, Jack's got the document in front, so I'm going to have to answer that one. I'm going to let him answer that one. That said, so that he can look it up now and he can buy some time, I'm going to stall.
I'm good.
Yeah, everything, you know, I just want to remind everybody that everything we said prior to this application coming out was an educated guess based on our interpretation. So we are pretty happy that the document itself did provide a lot of clarification. So a lot of the stuff that we may have advised in previous webinars, again, remember, it wasn't gospel because there's only one authoritative source, that's the law. And then there's a next most authoritative source, that's the Treasury, but it's still not the law. So, you know, anything we're doing is more grounded on common sense. So, you know, I just want to say that, stay tuned in, please. But at the same time, you know, so this changes a lot. So you can't necessarily take it as gospel until there's some sort of definitive guidance. It's just more of an educated guess. So hopefully that was stalled long enough for you to look it up, Jack, and go.
Yes, thank you. Thank you. Just as we planned, right? So I want to first make sure that and I don't remember exactly the comment. I do remember saying June 30th a little while ago, but and what I meant to say is specifically for the safe harbor and not the usage of the proceeds, or because we're kind of talking about two different things, and maybe we inadvertently or I inadvertently kind of mesh those together. So with respect to the bringing up the level of FTEs and what they've been paid. So here is the language, and it's on the last page of the application on the instructions, which is it's page 8 of the form. And it says that the borrower is exempt from reduction in loan forgiveness based on FTV employees described above if both of the following conditions are met. The borrower reduced its FTE employee levels in the period beginning February 15th of 2020 and ending on April 26, 2020, and the borrower then restored the FTE employee levels by not later than June 30th to its levels in the borrower's pay period that included February 15th, 2020. So that is the June 30th date that we're talking about, which is the penalty related or the safe harbor provision of bringing up the FTEs to the the appropriate period. There is another section in here with respect to reduction of the giving and offering the position, but the person not accepting. And then there is another section with respect to salary and hourly wage reductions, but it goes through a formula, which, we're not going to spend time going through that. So for purposes of clarity, I would suggest going through the instructions of the form, and it will help you walk through all of these various switches and what certain time periods and calculations are relevant for what they're relevant for. And that's not very artfully said, but are we talking about the forgiveness? Are we talking about the grace period? So what are we talking about? So when you walk through this and you go through your calculations, I think it'll become a little more clear. But to Adam's point, there is still a lot of muddiness and lack of clarity within this document still.
Yeah, and I think so where the conflict would still arise even with this guidance is that if your covered period based on either when you got the funding or you're like the alternative covered period stretches beyond June 30th, from this document it appears you're still stuck with the June 30th date versus letting it go beyond for the purposes of the safe harbor test.
Okay, I'm going to throw a bit of clarification from another attorney from the chat, and this is from Andy, and he's just talking about lifetime gift tax exemption and an annual gift tax exclusion, which is $15,000 for 2020. That number may rise in the future as inflation impacts the value of the US dollar, but so thanks for that, Andy, appreciate that. Next question is, we have a stop loss medical component of our health insurance where we have to pay the first $60,000 of each claim before stop loss medical benefits kick in. Can we include the amounts we pay out of pocket in healthcare costs? Everything runs through an insurance provider.
Yeah, that would count, but that would imply that you actually paid it. I think where you get into a challenge is if you employed nothing but Gary's and you didn't actually have any claims during the period, but then you had a ton of claims outside of the period, that one's a little bit more sticky. I suppose you could kind of pre-fund an accrual for potential claim activity and see if that works. But, as long as you're paying it, that would work, I would think. It's going to be when you didn't have to pay it, but you thought you were likely going to have to pay it later on in the year that it gets a little dicey, I think, in that scenario.
All right, this is a good one. Concerning sub-S distributions, did I understand you correctly? On a regular basis, in addition to W-2 wages paid, we also include a flat amount of sub-S distributions. Maybe we include those 8 weeks of distributions as part of our 75% payroll requirement.
No. Sorry, that was mean, but no. It's just a wage component.
Yeah, I mean, I think the question before was, can I increase? So can I somehow manipulate my owner compensation versus my employee owner compensation? Let me take that back. The money that I make as an owner as a return on or of my investment versus wages that I earn as an employee of my own company. And yeah, you can't manipulate that. So yes.
Yeah, I'm going to read that again because concerning sub-S distributions on a regular basis, in addition to W-2 wages paid, we also include a flat amount of sub-S distributions. Can we include those 8 weeks of distributions as part of the 75%? And just a validation, no.
2 thumbs.
Okay. All right. Hell, thank you for the encouragement. Somebody said we're doing a good job. Thank you. We appreciate that. Brett, on temp service question, wouldn't the ultimate payer, and that is the client of the temp service, be able to claim that they paid for labor and thus their payroll can be claimed as PPP for pay?
Well, again, the problem is you did not include that on the application process. So your application process included either the 941 or some form of reporting from a PEO. It did not include what you paid Robert Half for the temp accountant that worked there for, 2 weeks. So since you didn't get it on the front end, I just feel like at this point, it's going to be hard to get it on the back end, regardless of whether it's right or wrong. I think that one's going to be a stretch.
Okay, clarification from David. I take then that June 30th is the relevant date for FTE count related to forgiveness.
Yes.
Yeah.
Great. Next question. Our company's retirement plan for 2019 was top heavy. Therefore, we must make a profit sharing contribution to all eligible employees for 2019. May I apply these contributions toward our payroll portion of the PPP loan?
It gets back to the and question in the paid and incurred. Right now, you probably could. However, that's going to be one of those gray areas where we would really like for you to get there under the normal black and white stuff and have this be your variable to try to get the rest of the way there.
All right, last question that we have before somebody else throws another one here, but in Schedule A, line 13.
Jack, you have the form in front of you.
Photographic memory here.
Yeah.
How far should we round the percentage?
Let's see, Schedule A, line 13 is the FTE reduction quotient. Divide line 12 by line 11 or enter 1 if FTE safe harbor is met. All right, let me go to
5 decimal points. I don't know if it says.
Oh my gosh. All right.
Go back to calculus.
I mean, at the end of the day, it's still business friendly. My gut would say round down to the nearest whole number. Or sorry, round up to the nearest whole number, because that would be more favorable, but.
I think that's correct. So let's see. Yeah, it doesn't, it doesn't specifically state in here. I don't see it in the instructions or even on the line to say, round up. But I think that's, even if it's less than what, 0.5, when you're supposed to round down according to what, 6th grade math.
Yeah.
Go round up. But again, that is a Jack and now Adam and Gary theory. Don't hold us to it until we're told that. And I don't think they're going to come after you for that miscalculation, but document it.
Yeah, and since I was using the abacus when I was in going through mathematics, I don't know. We didn't know what round was other than those round slides on the abacus. So let's see, no other questions from what I can see here. Hold on.
I did see the chat though there, Joe. He can be rehired, but only if he comes out and cleans my RV. Specifically, a component of my RV.
Not in the sewer.
Hey, the one thing that I would say is it seems like, who would have thought that we would be still doing this this many weeks later? I wouldn't have thought it back in beginning of or middle of March. Now that I think about it, because I think the 2nd or 3rd week in March we started doing these things. But there is getting more clarity, but there's still it seems to be fairly complicated. We're going to continue to do these things for you guys. at no charge, and we're happy to do that as a service to everybody. If somebody really does want help, kind of soup to nuts in this application, we can do that. But just ping us at FAQ@trustbgw.com, and we can talk to you about that. And then we have a couple other options that you may not need a full service, but nonetheless, we're here to serve, and we're here to make sure that we all get through this thing together. Any other thoughts, Adam or Jack?
You had one question. I see it. What is it?
Okay, from Kathy. I received PPP money mid-April. I own a wellness center. We cannot go back to work until June 1. Will any of my PPP money be forgiven based on the fact that I haven't paid out anything?
And you got it. Whatever you spend conceivably would be forgiven pursuant to you hitting the FTE count by June 30th.
Yeah, I would say, I mean, the purpose of the money is to subsidize, a business owner not having to pay out money for payroll, for services provided by employees, and in some aspects to keep them off of unemployment, to keep some continuity, perhaps to keep them on the health plans of the business, those kind of things, so not actually have to terminate them. But if you have to spend the money in order to be forgiven for it. So otherwise, it's not within the purpose of the loan program. And so that the person who asked the question is in a boat with a lot of people who just, there was expectations that gyms were and other facilities were going to be open by now. And it was, I think, maybe just within the past 48 hours, that it was, okay, well, barbershops can open, but gyms can't. And I don't know if that was always part of the phase 2 plan or not. I don't know. But, there is an inherent incongruity as to why some get to open up and why others do not, which has a direct impact on your usage of the funds and your ability to seek forgiveness for those funds.
Right.
Yeah, Kathy did kind of a follow-up statement and said her staff made more on unemployment than they make when they work. And we've seen that unintended consequence across a lot of places. Got another question that came in here. Since we're an early receiver, is there any benefit to applying for forgiveness quickly, or should we wait for more clarification?
I'm just going to give you my own. We're pretty cut and dry in terms of our own forgiveness application. I want this behind me. So since I want it behind me and it's pretty clear for us, we're going early. If I was needing to use some of the gray area stuff, I probably would go a little bit later.
Yeah, I would say the same thing, similar to when the people who weren't sure about before the $2 million number was thrown out there as being kind of under the radar, that people said, okay, I better give it back just in case, and now maybe didn't need to. My recommendation is that you wait, have everything ready, but wait to see if you have gray area. But to Adam's point, if it's, your numbers and it's not going to change, no matter if there is a different interpretation of what you have, because it is cut and dry, black and white, and you may want to, just for psychological reasons, peace of mind reasons, do it.
Actually got a couple more questions that have popped in here. So this is from Joe. When should we expect to be notified if we requested PPP loan forgiveness assistance from BGW?
12th and ever. No, I'm just kidding. Good question. I saw the first date that somebody asked for help was on Tuesday. We'll make sure that we have responses back, I would guess, probably by this evening or tomorrow morning. Assume that we can help. I think most of the questions were related to the fees associated with it. So, but we're going to help everybody that asks.
Final question here is from Brian. If we pay some expenses by credit card, is that going to be an issue not paying by check directly to the vendor?
I don't think that's an issue. You just got to prove that you paid it, however you paid it.
Agreed. Documentation is the key. We've been saying that from day one. So yes.
All right, gentlemen, you did an excellent job again, as usual. It's good to see your faces again and being back on here. And thank you to everybody that dialed in and for the fun chat responses that we did not put on the air. But thank you for keeping us smiling and laughing in the middle of all this. Any other final thoughts, Adam or Jack?
Yeah, I think this one's extremely specific to probably restaurants and some medical practices in terms of, waiting but still getting to your number. A lot of the clients we have that have been in this specific boat, right now, the way the application reads, there's a double penalty between not using the money and not having the head count right. So, you get 100 grand, you only use 50 of it, and you only have 50% of the FTEs. The way the application reads right now is that you then only get 25% loan forgiveness because your request is lower because you didn't have that much payroll costs, and your FTE count, when you look at the reduction, hits you. So you got a double whammy. In this specific case, given that there's some hopefully pending legislation to stretch the game clock on people that are in that boat, I think my suggestion right now is instead of doing anything crazy right now, stick with whatever your plans were, with the caveat that, man, I need to plan on getting some bona fide offers out and rejections back to get my FTE count number right. Because in that case, if you're still running, like in North Carolina, phase 3 is not going to let up until June 26th. So you're still running at 50% capacity in the restaurants. You don't need all the people back. They're still making more on unemployment right now. So you need to, be ready with like that whole bona fide offer point so that in the event that it doesn't get stretched, at least you got the 50 grand that you spent covered off on because your head count's right, versus, I couldn't open back up and I spent 50 grand, but I only get 25 grand forgiven. I'm stuck with this note. I mean, that just seems like a very dumb, unintended consequence that hopefully they fix coming up. But just that would be my game plan right now, is spend whatever you were going to spend anyway, but start to be thinking through how to get credit for the head count without actually paying anybody in the event that they don't change anything.
We also talked about possibly doing a couple explainer videos in the meantime, just because there is so much probably unintended confusion that has come with some of the guidance or lack thereof. So we'll probably be doing that. We'll get the wizardry of Adam and his magic marker doing that. So stay tuned for that. And then we'll plan on being back here on Tuesday next week, and we'll just keep doing this until we have no more riding in the streets whenever we stop. So thank you so much. We appreciate each of you. And Jack, thanks again for being on here. It's always good to have you. So we appreciate it.
My pleasure. Thanks for letting me play in.
Yeah, it's good.
Hey guys.
All right. You guys have a good one. Bye-bye.
All right. Thanks.